Hi traders, welcome to another video. Alright, I'm Kayom, currently the Chief Currency Strategies for Alpha Play. If this is the first time you're watching this video, alright, so let me just share with you a little bit of what we do over here. On a weekly basis, what we do is we release a video to share with you some of our insights into the market and potentially some of the setups that you might want to take note of as well. So for today, this video itself, what I'll be doing is I received some requests right from students to actually wanting me to explain more about a certain strategy that we use to trade. So over here, alright, so this is the video that I'm going to share with you. It's more towards using divergence. So you can see the RSI indicator that we use over here. Right, so in terms of divergence strategy, you can actually use any oscillator, be it MACD, RSI, stochastic, etc. But what we like is we simply just stick to RSI, alright, and the period that we use is 7. Right, but of course any other strategies, any other indicators work as well. Right, so let me walk you through what is divergence. Alright, so basically, if you go and Google, alright, you just simply have to Google divergence, alright, hidden or classic. There's two kinds, alright. So let me quickly go through what is a classic and hidden divergence. Right, classical divergence usually is more of a reversal entry, alright, as pointed very clearly in this illustration. What it means is that price is perhaps going on a downtrend, and when you see this classical divergence setting up, right, your entry will be more of a trend reversal kind of entry, right? And of course, on the opposite side is the hidden divergence, and you can see over here is a continuations entry. So basically what it means is that you'll be most likely riding according to the overall trend. Alright, so what's the difference between these two is once again illustrated pretty clearly on this chart, this picture itself. You can see price making lower lows, alright, and oscillators, be it RSI, MACD, stochastic, they're actually making higher lows. So you can see, they don't move in tandem, alright, one moving lower and one moving higher. The same case happens for hidden divergence as well. One moving higher, one moving lower. Alright, so our strategy that we use over here, we don't look at hidden divergence, but we only look at classical divergence. Alright, so let me bring you into the chart. Alright, I'm going to show you two examples for clearer illustration. So the first example case studies, alright, I want to bring you through is the Australian Canadian pair. Alright, so you can see our RSI below, our price chart above, right? Over here, what you see is classical divergence. Alright, you can see price forming a lower low. Alright, whereas our oscillator, which is RSI, is actually forming a higher low. So over here we have a classical divergence. Alright, so once you spotted this, then the next question is, where are you going to enter? Am I right? So we don't make a trade simply because this divergence has been formed. What we want is we want to wait for confirmation. So in terms of divergence, be it classical or hidden, you do have a midpoint, alright? Some might call it midpoint, some call it neckline. Basically, it's the same thing that we are referring to. Is the middle part in which you form the two bottom or the two top, right? So the region we are looking at for the neckline, alright, or the midpoint is this one. So what we want, alright, is that once this divergence has been formed, we want to wait for this region to be breached. Alright, so what I mean is that price has to break and close above it. So this gives us a confirmation that yes, this is the bottom. Alright, double bottom has been formed with divergence. This is the bottom. Alright, so having said that, what we want to do is we pull in our Fibonacci tool. Alright, from the bottom to the recent high. And what we are looking for in terms of Fibonacci is the level of 618. So what we want is we want to wait for price to come back down towards the 61.8 retracement level, and therefore looking for an opportunity to long. Alright, so let me repeat the process. Alright, first you need to identify a divergence setup. Alright, basically either a double bottom or the double top with RSI divergence. Alright, and one that has been formed, you want to wait for price to break above your neckline. right, or your midpoint. And once that has been completed, what we do is we pull in our Fibonacci tool from our recent low to our recent high, and we wait for price to come back down towards the 618 retracement level, and that's where we look for opportunity to enter the market. Right, so let me give you another potential case study, all right, which is pound dollar. Just now we look at H4, this is on H1. Right, so if you look at this, what you are seeing over here is that we have a potential setup as well, because we have price moving high, but if you look at this RSI, alright, your oscillator indicators, it forms a lower high. So what we have here, alright, just now is a double bottom, here is a double top. Alright, and once again, for every double bottom and double top, you have this neck point. Right, and for this case, it's over here. And you can see price has break and closed below it. Basically, this zone has been breached. Right, and the next step, once again, is we pull in our Fibonacci tool from the recent high to the recent low. And what we are waiting for is at this 618 retracement level. So should price comes back up towards this level, that's where we'll be looking for opportunity to short the market. Right, not a very complicated strategy. Alright, it's as simple as, you know, 3 steps: identifying double top, double bottom, divergence, waiting for price to breach it, that's the second one, and then the third one is to just put in your Fibonacci tool, alright, and wait for price to retrace to the 61.8 level. As simple as that. Alright, so basically that's it for this strategy. Alright, not a very complicated one, but you know, doing it consistently and regularly over a period of time, it actually yield profitable result. Alright, so if you have any questions regarding this strategy, don't hesitate, alright, to drop your questions below this video under the comment section. We'll actually get back to you and answer your questions. What I'd like to bring you on top of this technical strategy, alright, is that I want to share with you this fundamental report that we have did. It's called the Central Bank Analysis Report, alright. So if you are aware, the past 2 weeks, all the major central banks has released their monetary policy statement. And so what we did is we simply looked through it, alright, read all the policy statements, and we came out with a summary of them, as well as a minor analysis as to, you know, the fundamental bias and what are these banks looking out for. So for example, right, under Bank of Canada, we decide to remain the overnight rate, basically the interest rate, at 0.5%. But that's just the headline, alright. What's important is you need to read into the report to understand, you know, what is their outlook. Is it more hawkish or is it more dovish? Are their outlook more positive or, you know, negative towards the economy? So this gives you an overall picture or idea, right? Fundamentally, what is this banks looking out for? Moving forward, you know, what are they going to react should certain economic indicators release, you know, in terms of positive or negative? So what I want to do is I will give you this link, alright, where you can download this report for free in this video as well. But I want you to really read through, alright, the different aspect, you know, like overall economy and growth, alright, the economic activity and employment state of Canada, the inflation in it. And what we came out as a conclusion, and we believe that this might be helpful to you in your trading decision. Right, so for example, the fundamental bias, this is not the overall fundamental bias, but it's just the fundamental bias based on the central bank statement itself. Alright, so based on the statement itself, the fundamental bias of Canadian BOC, alright, is bullish, and the key focus they are looking out for is the impact of the upcoming federal budget fiscal policy measures. Alright, so what it means over here is that, very simply, the Bank of Canada is now looking towards Yellen, alright, towards the Fed, and say, you know, whatever they do, they might affect our economy, our policy. So depending on, you know, what the Fed is going to do and release, we might, alright, as Bank of Canada, we might then take certain measures, alright, to actually you know, either complement it or counter whatever measures that have been taken from Fed. So these are some things that we feel is important, alright, as you progress as a trader, to also have an understanding of what is happening at the central bank's level. Alright, so let me bring you through another example. Alright, the MPC, this is basically the Bank of England. If you look through overall, alright, the latest statement which they released is 17 March. You can see that the overall conclusion is more positive. Alright, but it's not as bullish in terms of the tone of the central bank. It's not as bullish as the Bank of Canada. So that's why it's a weak bullish. And the key focus they are looking out now in terms of BOE or Bank of England is really about returning the inflation to a 2% target. Right, and her conclusion over here is that the MPC's best collective judgment is that it's more likely than not that the bank rate will need to increase over the forecast period to ensure inflation returns to a target in a sustainable fashion. So this gives you a clue that yes, the outlook is positive, alright, from the MPC's point of view, but they do not want to increase inflation in such a short period of time. So what we can expect is that sorry, not inflation, but interest rate. So what we can expect over the near term is that the interest rate of UK will not be increasing so soon. Alright, so even though the outlook is positive, you know that they are not very hawkish in a way. Alright, so this gives you a rough idea of what is the tone of the central bank. And therefore, using this tone will actually assist you in your fundamental analysis, as well as going into, let's say, if you want to long the pound or even short the pound, you know what you need to keep an eye on. Alright, pulling into this case study, alright, we know that inflation is one of the key focus of the Bank of England. And if you realize yesterday, alright, let me pull in yesterday information. You can see that pound yesterday they released their CPI. CPI is basically, if you click onto it, you can see it's actually referring to the consumer price index. Alright, and this CPI measures very closely in terms of inflation. Alright, if you look at this, alright, this is considered the UK's most important inflation data. And if you look at this is a miss, alright. The expected forecast is at 0.4%, but yesterday actual data release was 0.3%. And you can see, fundamentally the central bank is focusing on inflation, yet the data released for yesterday, the inflation is worse. Alright, and what you see over here in terms of how price reacted to that data is significantly bearish. So this gives you a clue as to understanding why do market move in a particular way, and I hope that sharing with you all this insight will give you a better overview of what is the currency market and what drives the currency market, not just simply based on your technical chart. So I wouldn't be able to share much with you, just through this one video, but do feel free if you have any questions, alright, once again, drop your comments and questions on the video below. We'll definitely answer them. And if you haven't liked or subscribed to our channel, right, do feel free to like and subscribe. And if you would like to, you can visit our website as well, where I blog and actually share on a weekly basis under market analysis. Alright, so this is some of the free stuff that I hope to share as much as possible to the trading community, and hopefully you gain certain insights and such to assist you in your trading career. Alright, so with that, trade according to your plan, alright, be cautious and always manage your risk well, and I'll talk to you soon.